Good morning and welcome to our Ashworth Wealth weekly market update. My name is Scott Thomas, and as I sat down to do this morning, I thought, man, it's been a long time since I've done this. And when I looked at it, it has been a long time since I've done this. So it's good to be back. It's always good, sitting down, looking at some of the numbers, the economic indicator numbers, and just kind of getting a pulse of where we're at and where things are going. I have some interesting numbers for you this morning. Normally we sit down and we look at the government produced numbers. And as you all know, that we're in the middle of a government shutdown. And so as of Friday, we're in our 17th day. So a lot of the numbers that we normally look at are not available. So we went a little bit off and looked at some other numbers and tried to get an idea of where things are at and kind of where the economy is as a whole. Is it healthier? Is it in decline? We just want to kind of understand where things are at. And I wanted to read a couple of things for you. So the number that I'm going to talk about today, and I'm going to show you a graph here, is from the Chicago Fed's Advanced Retail Trade Summary. And what that is that is another way that the Chicago Fed measures how the economy is doing. So we're going to go with that number today. And basically what it is, it's an 8-week average. They look at foot traffic going in and out of stores. They look at credit card activity. The one that they use a lot is Chase. And they look at, what are people's spending habits? What are they doing compared to what last year was? And so it's maybe a different way to kind of look at the economy, a little bit different than what we normally do. Now, this does not include car sales, but it's all economic activity or quarterly spending outside of that. So what they found, I'm going to show you the graph here. What they found is that as of right now, we grew 0.5% month over month, September to October, and it's a 6% gain from last year in consumer spending. So that actually looks very good, and actually it is the highest quarter of growth we've had in over 2 years as far as consumer spending. So what that tells me is that consumers still have confidence in the economy, they still have confidence in their jobs and whatever, and so spending continues to go up. That bodes well for stock prices and for companies and how well they're doing. And so that is a good indicator. There was some thought that possibly we could be going into a slowdown. And of course, every economist always thinks there's a slowdown right around the corner. But what these numbers show us is the economy is still continuing to grow and it's still continuing to be healthy. So this graph that I wanted to share with you today is consumer spending by incomes. And if you look up here in the upper part of the graph, the light blue is those that have incomes of less than 75,000. The gray is 75 to 250, and the dark blue is those that have income above 250. And what this graph shows is the spending habits of those three groups of people. So those with the lower incomes, the 75 and below, their spending has continued to go up. It's just not gone up as fast or as high as what the higher incomes, those with higher incomes have seen. So what that tells us is those that are of lower income are still struggling just a little bit, even though they are spending more money than they were a year ago. They are not doing as well, and they're not spending as much as those with the higher incomes, which doesn't really surprise me with all the things that are going on out there. So, what does that mean? Spending is up again. That's a good indicator of the underlying economy that things are continuing to grow. A couple of numbers I wanted to share with you. I looked to see what the Fed is doing, and obviously we had a 25 basis point lowering of interest rates here not too long ago. And looking forward, so I just looked up what most economists are predicting through the end of the year. So the next time the Fed meets is October 28th, so we're a week from today. And most economists are expecting another two rate cuts by the end of the year. And again, not saying it's going to happen, but it looks like most people are thinking it'll be most likely a 25 basis point interest rate reduction here next week, followed by a 50%, not 50, 50 basis points reduction on their meeting on December 9th. So if that happens, what does that mean? Well, it means it's easier to buy a car or buy a house or any type of consumer loan. It's easier to get money, and that just loosens up the economy. It's easier to get a mortgage. Mortgage rates are going down. In fact, speaking of mortgage rates and car loans, I looked at the 30-year average mortgage right now, and again in Utah it's a little bit lower, but industry or nationwide, it's about 6.17%. Well, you can imagine that with a 75 basis point decrease, if in fact that's what the Fed does, and it always is not always a one-to-one ratio, but if mortgage rates go from 6.17 down to, let's say, 5.25, that's sure a lot better than it was a year ago. Which hopefully that means it's easier for people to get into homes. Car loans are going to be cheaper, and that helps the economy continue to grow. Okay, one more number I wanted to kind of concentrate on, and this has been the number that we've all watched very, very closely over the last couple of years, is inflation. Inflation last month was right around 2.7% again. That's a little bit higher than the Fed's goal of 2%, but it has been down in the twos for long enough now where I think the Fed is finally feeling like they can reduce interest rates, stimulate the economy without triggering inflation again. And I think that's why most economists feel that we are going to have two more rate cuts by the end of the year. If that happens, that helps with everything. Like I said before, it's easier to buy a home or cars or consumer loans, whatever. It's a stimulant to the economy. Again, we're grateful that you join us for these. Please let us know if you have any questions or concerns. We get questions every once in a while. Someone will have a question about something in the economy. Please let us know. You can email us or call us, whatever, and we'll try and cover it. Again, thanks, and we'll see you next time.